I think is pretty fascinating this week. I talk about politics quite a bit because how could you not? I mean, today was just one of those days where I sat back in my chair absolutely laughing. The president's now getting pushed back to September 8th for a speech. We got to worry if he's going to interfere with football nights. Can't have that going on, can we? And the Republicans continue to push him around. I don't know that he knows how to push back. The second element, and it's a big element as I see it, there's nothing different since they left before holiday. The fights continue, the infighting with the election coming, unemployment high. I think that what's happening is the Republicans are just looking at this really hard and saying they can take this office. How do they go about doing it, and how do they make life miserable for him? Unfortunately, we will get the benefit of all that problem. You know, it's time for all this nonsense maybe to go away. Yes, there's an election, but what about our economy? Don't we have to address it? And I'm saying things you probably think yourself. Gold market today is not responding. Gold market and stock market are down. We're looking at a run to the bond and note market and a run to the dollar. Why is that? It's because the sovereign debt issue in Europe is not only not going away, it's actually under the table getting worse in certain areas. Now, there's good things happening in Europe too. If you looked at the Irish debt, if you looked at Spanish debt, the yields that they're having to pay to fund debt, it's falling down. The secondary market likes what's going on there. Not so necessarily that way, not necessarily that way in Italy, and of certain. We know Greece is a whole different issue, and now Germany, within Germany in the parliament, there's infighting going on. There's quite a few of the members that don't want to do more funding. They don't think it's legal, so that's the first challenge. The second thing that's going to happen when you get this much debate, Parliament's going to start taking control over what the cabinet and the president there can do, and there's problems, and there's real problems. So you're starting to see the euro get hit. The question is, what does it do for gold? I don't see how it can be anything but bullish long-term for gold, but that remains to be seen. You know, if you look at a chart of the gold, and obviously today's first day of September, literally this area was what most of the trading was about. The market did start off at the end of July, very beginning of August, right down here in that 16 and a quarter, 1650 area. So don't forget, you're $200 in 30 days from where the month of August began. That's pretty good, pretty impressive by any stretch of the imagination. But right now what's happening is the chart is starting to streamline, focus in, and narrow in its activity. And you get to see this real clear when I put on the swing line study. You can see the highs, you got lower highs. You can see the break lows, you got lower lows. Any way you want to call it, that is a short-term swing line pointing down. Not through, though. Now that you've had a day that you've backed off in an inside day, I think if you get over 1845.10, and that was 2 days ago's high, I think the market makes a pattern of what? Higher lows, as long as you don't take out this 1813.60, and that could kick you up. Let's assume the market goes the other way, and let's assume the market takes out 1813.60. What would happen? This is why I think this is so important. You've already got the lower highs. That would mean you're starting a new pattern of lower and lows, a brand new one, and that could drop you back down in the gold. So where's the market going to fight a battle? Well, if it drops, look at the 18-day average of closes. You haven't been able to really stay under that number, so I think it's 1799.10. If the market closes under that number until you get more reason to believe that you should be buying, what do? You wait and you see where the dust is going to settle. So to me, one of the better chart patterns is waiting for the market to get up there to make the new highs, because buying on the break, well, that sets up a chart pattern that's not the ideal one as I'm seeing it at least. Below the market, the 45 and 100-day averages, they're far away. So what about the Bollinger Band? Can that offer us any idea? Well, the market hugged it for a long time in mid-August, has gotten away, but look at how the bands are narrowing in. This is all good. So I'm going to say that 1715, if you get into the bear phase, could be where you're headed. If you can clear the 1845 area, I think 1885 is your next upside target. So now I'm starting to get at least some picture as to what I'm saying. And in terms of market momentum, there is none. Strange as can be, this sideways action has caused the market to just flatten out in terms of momentum as traders scratch their head and try to figure out what to do next. The silver market has been stronger than the gold. Take a look at the 18-day average of close. It's gotten here at 40.55 over the last break low of 40.4550. The market has a pattern of highs that are higher than previous highs, break lows that are higher than previous lows, and the 18-day average is above the swing line low. That to me is a bullish area. Copper. I've warned not to chase the copper up against the Bollinger top. So today the market's down 5.5 cents. Where did it peak? Right against that top. Anyone buying at or above that top is right now under some water. You could afford to fall back here and correct an overbought situation. This is a market where you wait a little bit. People are saying, oh, China's in the market buying. Well, I don't know if they are or aren't, but I know they're good enough that my guess is they were accumulating if they needed product here. Not as the market broke out to the upside, they probably backed off, is my guess. In looking at crude oil, the crude is ahead of itself. Market is sitting here pretty much unchanged. Now, one of the things I showed in my other report of the financial markets was how the crude oil and the stock market go hand in hand. There's two crude oils, though. You've got your WTI crude, and then you've got your Brent. It's the Brent that's going pretty much hand in hand today with the stock market. They both have had a nice rally. Suddenly you're starting to get a little bit of problem. But there's nothing bearish on this chart. Supports back at the 109 level. On the WTI crude, the support's back at the 85.65 level. This market is overbought, and you're trying to change right now the character of the Brent from a market that was overbought to one on a pullback will be able to get enough strength to convert itself from overbought to locked in to the trend, embedded. And that could become very bullish down the road. In the rebound gasoline, you finally have hit your Bollinger tops. You're staying under them. This is still very bullish, and you have your embedded stochastic. So this market might be looking, as I suspect it is, at some of the refineries, what's going on with the hurricane now, or cyclone as they're going to call it, in the Gulf of Mexico. Where's the impact going to come? What's going to happen? And so on and so forth. Today we had a break in the note market, and then, again, the president delaying the conference. We had a bunch of economic data this morning, and first some people thought it looked good. I haven't yet to figure out what I think they saw. I don't see anything good, and I think that the note market is saying that. Plus, all this infighting in Congress is getting people scared that nothing is going to happen, and nothing is not good. So people are, again, stepping in, buying U.S. Treasuries, even at these crazy, ridiculous, low yields, and I think they're getting scared of Europe at the same time. So those are things I'm at least watching. Here's your gold-silver ratio, and for the longest time it's stuck in this approximate 44 to 1 ounces. One day it's 43.5, the next day it's 44.25, but it's sideways action. I like that it is narrowed in very, very dramatically, and these are the kind of areas that you ultimately get moves out of. So we'll wait and see how that happens. Even Bollinger Bands can work on spreads, is one of the theories that I have. So in looking at it as I'm finishing up here, stock market down 116 points. You can see that you've had a good rally in the bonds, even the TLT ETF that Mark Leibovitz was talking about the other day, still getting a good bid into it. And the metal markets, well, backing off a little bit. I don't think you're going to get any more action out of them today. With that, I'm Ira.